Very good morning, students. Uh, Hope you have revised up to now what we have discussed. We are in the standard costing chapter. We have discussed introduction to standard costing and variance analysis. We also discussed material cost variance in detail. We also discussed labor cost variance with ideal time and without ideal time. We also discussed variable overhead cost variance with ideal time, without ideal time. We also discussed the efficiency ratio in yesterday's class. We also worked out variable overhead cost variance based on hours and based on output. Now I'm coming to the last topic with respect to CA Inter, that is about fixed overhead cost variance. Majority of the students, if you can ask out of 100, 90 to 95% students thinks that so remaining variances are of different, fixed cost variance is different. It is literally difficult to understand the fixed overhead cost variance. In the examination, if I get fixed overhead cost variance, it is simply choice. That is even with my problem when I'm studying. But when you understand the logic of fixed overhead cost variance, the nature of fixed overhead cost variance, then fixed overhead cost variance is another simple one. And if the examination, if they give you for 8 marks, 4 marks can be scored easily by just understanding the logic. And if you understand totally, you can get 8 marks. So whenever the examiner wanted to give tough question with respect to standard costing and variance analysis, 100% they'll be giving from fixed overhead cost variance. So if the question comes, that would be for 8 marks for sure, or 8 marks or more only. Now, let me discuss, dear students, this is a very important topic. You will understand this because this is a topic which you are going to use it for CA Inter, CMA Inter, CA Final, and CMA Final. So throughout your career of CA and CMA, you are using this concept. So be attentive to this class, and I feel that at the end of this class, you will be aware about fixed overhead cost variance in total. Right? So I'll be discussing with simple examples. I'll make you to understand the concept of each and every one. Be attentive to this class. Okay. Now, fixed overhead cost variance. Sir, as you have discussed up to now, if you feel that material, labor, variable overhead, more or less same, maybe the names might be changing. Maybe instead of price, you may call rate. Instead of efficiency, you may have different usage. That's it. But with respect to fixed overhead, the concept altogether is different. What is the reason, sir? Sir, material, labor, and variable overheads are variable cost, whereas fixed overheads are fixed in nature. What did I discuss yesterday? Variable cost means it changes with changes in the production. If my production quantity increases, variable cost will increase. If the production quantity decreases, variable cost decreases. Whereas with respect to fixed cost, it is irrespective of your production, you are supposed to incur that cost. Yesterday, for example, you take about material. If the quantity increases, material quantities also increases. That is, material consumption will also increase. If the production quantity decreases, consumption quantity also decreases. Whereas in terms of labor, sir, labor cost will increase with respect to increase in production, vice versa, decreases with decrease in production. Variable overheads also, sir, it is also majority, it will be depend on your labor hours only. So variable overheads also increases with increase in production, whereas variable overheads decreases with the decrease in production. Whereas with respect to fixed overhead, it is nowhere relevant to your production. Your production could be X, your production could be Y, your production could be Z. The fixed cost remains the same up to certain level of capacity. Like for example, I wanted to conduct a class. For that, I need material, that is our printed material. I may need faculty. I also need the room. Sir, faculty, if I'm paying based on hours, it is variable cost. Material cost based on number of students, I'll take the printout. That is also variable cost. Whereas rent, sir, I have a capacity to keep 1,000 students or 100 students in a room. If the number of students are 10, I need to pay same amount of rent. If the number of students are 50, I need to pay same amount of rent. If the number of students are 100, I need to pay same amount of rent. That means here fixed overheads is not directly proportional to production. Now, by the way, before you need to understand, we are learning the fixed overhead cost variance under absorption costing system. So do we have any other costing system where we need to find out fixed overhead cost variance? Yes, we have a marginal costing system. Sir, material, labor, variable overhead cost variance remains same either under absorption costing system or under marginal cost system. You are better aware because we have a one problem in marginal costing where you try to find out the profit under absorption costing, trying to find out the profit under marginal costing and finding out the reconciliation between the profit under absorption costing and the profit under marginal costing. Whereas what we are learning at CA inter level or CMA inter level, we are learning the fixed overhead cost variance under absorption costing system. What is the major deviation between marginal costing and absorption costing? The only difference is because of fixed factory overheads. Sir, whereas before we need to understand what is the difference, you need to understand two types of cost, which we have discussed in question chapter number 1. That is product cost and period cost. So what is meant by product cost? What is meant by period cost? We might have discussed in chapter number 1, but I wanted to reiterate again in this topic. Product cost is that those costs are which are included for inventory valuation or those costs which is required to produce a product is called product cost. So in a simple terms, those costs which are included in calculation of inventory valuation. What is meant by inventory? Sir, refer our accounting standard to inventory includes raw material, inventory includes work in progress, inventory includes finished products. What about period costs, sir? So these costs are incurred irrespective of production. That means it is based on period. Like for my rent, sir, if 1 month is over, I need to pay the rent. If 2 months are over, I need to pay the rent, irrespective of production. And these period costs do not considered in inventory valuation. So why are you saying this, sir? The reason is that the product cost under absorption costing, the product cost under marginal costing is different. Under marginal costing only, because this topic is also relevant in our marginal costing chapter, so that is the reason I'm giving the basic information here and we'll be discussing in detail in terms of marginal costing. The reason is that unless you understand here, the reason is that in the examination you are learning fixed overheads and after some point of time in the examination they ask you find out the fixed overhead cost variance under marginal costing system. Whatever you learned, whatever the efforts you kept will become vain. The reason is that under marginal cost system, I don't have any expenditure variance. I will not have any expenditure variance because you are learning. You know, you need to understand under which system you are doing, under which system the examiner has asked whether this is a topic in CA final. But why I wanted to give information is that majority of the times, if the question is supposed to be difficult, they are bringing the topics of CA final and asking the question in terms of CA in-depth. I have seen number of questions such a way. That is the reason I am telling you the difference of how we need to interpret a question. Unless you understand the question properly, it is very difficult because a small word will change. A small word will change the answer. That means if they ask you find out the fixed overhead cost variance, it is simple. If they ask you find out the fixed cost variance under absorption cost system, so you don't know what cost system you have learned. If they ask you find out the fixed overhead cost variance under marginal costing system, so unless that comes in your mind, you will not do the answer. That is the reason I'm explaining this absorption costing system and marginal costing system. Okay. Now, what is the major difference of absorption costing and marginal costing is about treatment of product cost and period cost. And this topic I will not repeat in marginal costing again because you need to learn here. You need to apply directly in the marginal costing chapter. Okay. Now, what is meant by product cost, sir? For your understanding, what I want to say is that those costs which are considered for inventory valuation is called product cost. And those costs which are not considered for inventory valuation is called period cost. Sir, in costing, the logic is that by understanding the word, you can understand the nature of that. Period cost, based these costs are incurred based on period. Period means based on time. The time expires, the cost will increase. That is the concept of period cost. Now, what is the difference of product cost under absorption costing and margin costing? Margin costing considers only the variable production cost. Variable production cost. What is meaning by variable production cost? What includes that? Direct material, direct labor, and variable factory overheads only. Whereas in terms of absorption costing, absorption costing considers the production cost. That means here I'll be having one more topic: direct material, direct labor, variable factory overheads, and fixed factory overheads. This is a new thing. That means fixed factory overheads are considered for inventory valuation under which costing system? Absorption costing system. Whereas fixed factory overheads are not considered under as product cost under which costing system? Margin cost system. So obviously, when in terms of inventory valuation, if the particular cost is not considered, the inventory valuation will go down. That means in terms of absorption costing, my inventory valuation is higher. In terms of my margin costing, inventory valuation is less. The reason is that I'm not considering one cost as a part of my inventory valuation. That means whenever you got a question, what would be the difference of marginal costing system and absorption cost system is the treatment of fixed factory overheads as product cost. That means under absorption costing system, fixed factory overheads are considered as inventory valuation. Under marginal costing, fixed factory overheads are not considered. And remaining all costs are period cost, either under absorption costing, either under marginal costing. That means the variation of absorption costing and marginal costing is purely because of consideration of fixed factory overheads as product cost under absorption costing, whereas marginal costing, it thinks that any fixed cost or period cost. I repeat this word. Under marginal costing, any fixed overheads or any fixed cost or period cost. That means under marginal costing, what are my product cost? My product cost are direct material, direct labor, variable factory overheads up to factory level. Whereas under absorption costing, I consider these three and I also add what amount? Fixed factory overheads. So that is the reason we are learning the fixed overhead cost variance under which costing system? Absorption costing system. Hope you are clear up to now. Okay. Now let me move forward. Sir, why fixed overheads are different? Sir, if a particular order comes, or I'll tell you simple example. Sir, I wanted to conduct a class. Now, I thought that material cost is 200 per student. Faculty cost is 2,500 per student. If number of students are 10, I need to pay 25,000. The number of students are 30, I need to pay accordingly. So in addition to this material and faculty, I also need a room, that is classroom. Sir, I am starting for the first time. I know some costs are, I can forecast some cost, whereas I cannot forecast some cost. Now, for example, how much I agreed with my owner is that I need to pay 20,000 rupees per month. The capacity of the class is I can accommodate up to 50 students. Remember this word. That is how I slowly am taking into fixed rate. Okay. Now tell me, the material cost is variable. The faculty cost is variable because it depends upon the number of students. Whereas my classroom rent is fixed. It is a fixed rate. Now, for example, I need to tell what is the fees of that course. Let us assume we are only taking the class of costing, assume the costing only. So Srinivas sir is taking classes for CA Inter or for CA final, whatever it may be. Now, obviously what you'll do, 100% of the students first they inquire about the fees. Yes or no? So any institute, whether it is quality, whether it is a quality or not quality, yes, that is also matters. The another important matter is what is the price. What is the price of this course? Now, for example, if student you have called to me and ask me, sir, what is the timings of the class and what is the fees? If I say that my material cost is 200, my faculty cost is 2,500 per student, and I have some margin of 10%. If I say like that, can I ignore my rental cost? If I do not recover this rental cost from students, where do I recover this rental cost? I need to bear loss. No. Sir, that is where the importance of pricing comes into picture. Sir, if you underprice the product or overprice the product, you are going to get a loss. What happens if you underprice the product? Your sales may go up, but you are enter into loss. If you overprice the product, your competitor is selling the same product at lowest price. You are selling at the highest price. Obviously, your customers will go to your competitor. That is the reason. Very important part of the costing is pricing decisions. So that is where the costing helps. Sir, for example, I already said if you underprice the product, you may get sales, but you are in loss. If you overprice the product, you will not get sales because the customers will go to your competitor because the products are the same. Now that means keeping the optimum price structure is very important in terms of pricing decisions. It also depends on different circumstances, like where is the place of the market, different types of customers. This is all we discuss in CA final. So for example, if it is Apple, if you see they've priced the product premium at the beginning and they try to reduce the cost when the new product comes. If you take Geo, they are given it free of cost at the beginning, then they start charging it. So different companies will have their different pricing strategies. Now, for example, if I do not include my fixed overhead, that is rental into my course fees, where do I recover these rentals? If I do not recover it from student, that the amount will be recovered from my profit. That means I am reducing my profit. which is not correct. Yes or no? Or if I say to student, let us assume one student has called me, Amma, yes, I have some cost in my mind. Material cost is 200, Amma. Faculty is 2,500 you need to pay. Rental I have not discussed, not yet finalized, Amma. So 20,000 rupees per month I am paying. If 50 students comes, each student should pay 400. If 10 students comes, each student should pay 2,000, and total 200, 2,500 plus rental cost plus margin I'll charge them. First you need to pay these two. Remaining two will be discussed after our number of students based on number of attendance of the students. Will you accept? May get into doubt. So what if I am only attending this class? Should I pay 20,000 rupees rent? 20,000 rupees as my fee structure? So obviously that that thinking of the students will get changed. That is the reason many entrepreneurs struggle to keep the price in optimum price. If you change the price, your sales will also change drastically, either upwards or downwards. So when a student calls me, I should understand that. Okay, what is your expectation of your students based on your experience? My experience is that for 1 month course, I'm expecting that generally 40 students will come to the class. How many students, Amma? 40 students come to the class. Now see here. Now I'm discussing about only fixed audit. Now, first thing which you understand is that now I've estimated my cost of fixed audit would be 20,000. This I'm naming a term called budgeted fixed audit. What is a budgeted fixed audit? 20,000. Remember, I have a few terms which you need to understand. This is the first concept. This will be given directly in the question. You need not work out. That will be given directly in the question. What is a budgeted fixed audit? What is my budget fixed audit? What is my budget fixed audit? That is rent. How much I need to pay? 20,000. Now, what I'll think that, okay, from each student, how much I should recover? And there is a second concept called budgeted output. What is my budgeted output? 40 students. This is second one. These two are majorly available in the exam, in the question itself. Budgeted fixed audits 20,000, budgeted output 40 students. Now think from my perspective. Okay, I'm expecting 20,000 rupees would be my rent. Okay, this is all before I take an agreement with my owner. Okay, 20,000 rupees would be my fixed audit, and I'm expecting 40 students to come. So from each student, how much I should recover? That is we call as standard recovery rate or standard absorption rate. Absorption or recovery rate. That is 20,000 divided by 40 students. How much amount? 500. This third point to be remembered. Standard absorption rate or recovery rate. How much I should recover from each student? Now, how you got this? Budgeted fixed audit divided by budgeted output. What is my budgeted fixed audit? My budgeted fixed audit is 20,000. What about my budgeted output? 40 students. So I decided, this is all happened before the class begins, class commences, or before the admission starts. So what I expected is that, okay, 20,000 would be my rent and 40 students are expected to come into the class. So I should think that I should recover at least 500 rupees from each student. That is we call the standard absorption recovery rate. That is per unit. If you want per hour, budget fixed overheads divided by budget hours. That means up to now we understood what is budget fixed overhead. And second thing, we have understood what is the absorption rate. Now, see carefully. Classes are started. First day I have seen my attendance. How many students got registered? How many students got registered? Now, based on my information, based on the actual information, actual output means actual students turn to be 45 students. Turn to be how much amount of 45 students. See carefully. From each student, I decided to recover how much amount? From each student, I decided to recover how much amount? 500 rupees. Now, what is actual number of students got registered? 45. Now, tell me whether I recover 500 only from 40 students or whether I'll recover 500 from 45 students. Sir, each student will make the payment, or will you say that, oh, up to 40 students only I'm expecting? For 40 students you pay only material cost and faculty cost and fixed overhead. Those who joined after 40 students, you need to pay only material and faculty cost. You need not pay any fixed overhead. If I say that, those students who got registered earlier will feel bad. Why, sir? We have joined, we are not getting benefit. Those who join late, they are getting benefit. So that is not happens. What is the thing happen? I recover from each student 500 rupees. That means how much I will collect amount. That is we called as absorbed overheads. Absorbed fixed overhead. So how much I collected? Now tell me whether my collection is based on actual output or whether my collection is based on budget number. That means whether I'll get collection from 45 students or whether I'll get collection from 40 students. I'll get collection from 45 students. What is this 45 student? Actual output. Into how much you'll recover? That is 500 is called what? Standard recovery rate or standard absorption rate. Both are same. What is my actual output? See, what is my actual output? Actual output is 45 students. From each student, I record 500. 45 into 500, 22,500. Understand? Hope you're understanding it in a proper way. Sir, I'll repeat the word. Sir, I wanted to start a class. I took a room, which is my fixed overhead. The rental is 20,000. I don't know how many. This is the reality of any entrepreneur. You take up any class. Sir, the batches are announced, but you don't know how much to collect from each student because you don't know how many students will join. So this is all goes by normal expectancy based on your experience. So I'm expecting my output to be 40 students. That is budget output. That is all planning. Budget is always planned. 20,000 is planned. 40 students is planned. So based on these two numbers, I wanted to recover some amount from each student towards the fixed overhead. Because fixed overheads are not incurred based on production. Fixed overheads are incurred in total, which is constant. It is a period cost. I decided to recover 500 rupees from each student. 45 students got admitted. Now tell me from how many students I will recover? I will recover it from 45 students. 45 into 500, how much amount? 22,500. What is this called? Absorbed fixed overhead. And absorption is always based on which output? Actual output. Very, very important in this fixed overhead cost variance. Absorption is always based on actual output. Please write down. Absorption is based on actual output. Now I collected 22,500. See here, originally I thought that my rental cost would be 20,000, but I have recovered 22,500 from students. The owner came and told me that, sir, suddenly the government have increased municipal taxes, sir. you need to pay your municipal taxes. He said that you pay me 21,000. What is this 21,000 is called actual fixed overhead. Three types of fixed overhead I am explaining you in this. I'm explaining you in this class. First one is budget fixed overhead, which is estimation of your fixed cost. Absorbed fixed overhead. How will you get absorbed fixed overhead? What is the actual output multiplied by standard recovery rate? Third one is actual fixed overhead. What is fixed overhead cost variance now? Simple ones. What is my fixed overhead cost? How much you have recovered from the students? I have recovered 22,500, sir. How much you paid to the owner? 21,000, sir. How much is your profit amount? 1,500. Over absorption or under absorption? Over absorption, because you have observed more. Now, whether if it is a profit, is adverse or favorable? Favorable. What is this 22,500 is called? Absorbed fixed overhead. What is this 21,000 is called? Actual fixed overhead. Think from my point of view, how much I collected in my pocket? Sir, from each student 500, sir. 45 students joined. 45 into 500, I have collected 22,500 in one pocket, that is left pocket. And I have paid, how much I paid to the owner? I have paid from this 22,500, 21,000 is paid to the owner. So how much is left with you? How much you have over absorbed? 1,500 rupees. So absorbed fixed overheads minus actual fixed overhead. Absorption is based on which output? Actual output. Now actual fixed overhead. Now tell me why you got this 1,500? Because of your two cases. One is volume. Because originally you planned for 40 students, whereas 5 students got increased. So originally you thought to collect 500 rupees from each student. From how many students, Amma? 500 students. Sorry, 40 students. Whereas you have collected from how much? You have collected from how many students? 45 students. Now tell me, how many students you have collected more? 5 students. How much you have collected from each student? How much amount? 500. 5 into 500, how much amount? 2,500. Whether you collected more or less, you have collected more. Favorable. What is this 2,500? Sir, absorbed fixed overhead. This is what I collected, but originally I thought my students is only 40. Absorbed fixed overhead, how much amount? 22,500. What is the budget fixed overhead? 20,000. 2,500 collected more. Absorption is based on which output? Actual output. What is your actual output? 45 students into 500. Budget fixed overhead is based on which output? Budget output. What is your budget output? 40 students into 500. That is we call 2,500 favorable. Sir, even if I don't understand this formula, simply understanding that, sir, I have decided to collect from 40 students, sir, because of my volume increase. From 40 students, I got 45 students. 5 students, I got more. That means from 5 students, I will collect 500 from each student. That is total how much amount? 2,500. Whether I collected more or less, more. More is what? Profit to me. So what is volume variance is absorbed fixed overheads minus which overheads? Budget fixed overhead. Now, what is the second reason of fixed overhead cost variance? Expenditure variance. So originally you thought, this is the logic. See carefully and understand carefully the beauty of this fixed overhead cost variance. Sir, originally you thought that for 40 students you need to pay 20,000. For 40 students, how much you are supposed to pay? 20,000. Now my volume increased from 40 to 45. How much I should pay, sir? I repeat this word. Listen carefully. Sir, originally I thought that 40 students will come to my class. I need to pay 20,000 rupees rent. This is all original planning. Now my volume got changed from 40 students to 45 students. Now tell me, for 45 students, how much rent I should have actually paid? Many students do that. 20,000 divided by 40 into 45. Absolutely wrong. Sir, this is not a variable cost. Whether this is 40 students or 45 students, I should pay only 20,000. Why? This is a fixed cost in nature. Sir, fixed cost will not change with the change in the production quantity. Whether it is in terms of material, when in terms of labor, in terms of variable overheads, yes, this calculation comes correct, provided because those are variable in nature. Now, whether 50 students sit in the class, 40 students sit in the class, 30 students sit in the class, or 1 student sit in the class, I should pay only 20,000. Because my fixed overheads are not relevant with my production up to normal capacity. Now, instead of paying 20,000, how much I paid? 21,000. That is because of changes in expenditure, the change in owner's mind, the change in owner's taxes. Now, how much I paid extra? 1,000 I paid extra. Adverse or favorable? Adverse. What is this 20,000 is called? Budgeted fixed overhead. What is this 21,000 is called? Actual fixed overhead. That's it. That is what about fixed overhead cost variance. That means in fixed overhead cost variance, I need 3 types of overheads. What are the 3 types of overheads? Please repeat with me. Budget fixed overhead, absorbed fixed overhead, actual fixed overheads. In majority cases, budget fixed overheads and actual fixed overheads will be given in the question. That means in the question, if they give you budget fixed overheads and actual fixed overheads, means you can work out directly the expenditure variance. Sir, if the 8 marks question, if they ask you, one would be the expenditure variance. Even if you do not do anything else, just in expenditure variance, you just see in the question what is a budget fixed overhead, what is actual fixed overheads. Fixed overhead expenditure variance is equal to budget fixed overheads minus actual fixed overheads. 2 marks will come directly without doing any other point also. Why, sir? Sir, in terms of my expenditure variance, whether the volume increases or decreases, I should spend only one amount. If I spent other than that amount, that is my expenditure variance. That means put together, I will have budgeted fixed overhead, absorbed fixed overhead, and actual fixed overhead. These two will be given directly in the question. That means fixed overhead expenditure variance is equal to budget fixed overhead minus actual fixed overhead. Fixed overhead volume variance is equal to, volume is what? Difference of volume. Sir, budget you thought of one. Budget is what? Plan number. Absorption is based on which output? Actual output. Volume is what? Difference of budget and actuals, right? And actual overhead, actual output is taken which overhead? Absorption. Absorption is always based on which output? Actual output. So fixed overhead volume variance is equal to absorbed fixed overhead minus budget fixed overhead. So in budget you will have plan, in absorption you will have actual output. Now fixed overhead cost variance is equal to sum of these two, right? Budget get cancelled. Absorbed fixed overhead minus actual fixed overhead. How will you arrive absorbed fixed overhead? This is already discussed. Absorption is based on which output? Actual output into standard recovery rate. How will you arrive standard recovery rate? Standard recovery rate is equal to budget fixed overhead divided by budget output. Now, if it is based on hours, budget fixed overhead divided by budget hours. So whenever there is a output, you should consider output rate. Whenever there is hour, you need to consider hourly rate. Budget hours. This is simple. So first you find out standard recovery rate. You just look out your eyes at budget fixed overhead and budget hours or output. Absorbed fixed overheads. Absorption is based on which output? Actual output into which recovery rate? The standard recovery rate. That means absorption. How will you absorb? Absorption is based on which output? Actual output. Now then you need to we'll have three overheads: budget fixed overhead, absorbed fixed overhead, actual fixed overhead. Budget minus actual expenditure variance. Absorption minus budget volume variance. Absorption minus actual fixed overhead cost variance. So if I put budget fixed overhead, absorbed fixed overhead, budget fixed overhead, actual fixed overhead. Difference of these two straight away in the question: expenditure. Difference of these two: volume. And difference of this one: cost variance. This is all okay when you do not have any effect of efficiency, when you do not have any effect of calendar or capacity. That I will discuss in the next question. Clear? Please repeat with me. Sir, in the question, first when you get it, first you try to take out budget fixed overhead. Actual fixed overhead should be given in the question. Difference of these two would be which variance? Fixed overhead expenditure variance. Now I need to calculate absorbed fixed overhead. Absorption is based on which output? Actual output. Actual output into what? Standard recovery rate. How will you calculate standard recovery rate? Budget fixed overhead divided by budget output. In this example, sir, I thought of 20,000 rupees to my rent. I expected 40 students. So from each student, I decided to recover 500 rupees. What is that 500 rupees is called? Standard recovery rate, standard absorption rate. How much I actually got? 45 students. How much you have absorbed? Actual output of 45 into 500 rupees per student, 22,500. How much I've actually planned? 20,000. What is the real expenditure? 21,000. So I collected 22,500. I paid 21,000 to my owner. 1,500 left with me. That is we call as over absorption. The treatment of over absorption, under absorption, we'll discuss in overhead chapter. Now, so you'll work out fixed overhead cost variance. Fixed overhead cost variance is subdivided into fixed overhead volume variance, fixed overhead expenditure variance. Volume variance is what? Difference of what? It is because of absorption minus budget. Absorption is based on actual output. Budget is based on budget numbers. So 45 students minus 40 students. For 5 students, you have collected 500 rupees each extra. 2,500 are collected more favorable. Expenditure variance. Sir, whether the number of students are 40 or 45 or 50 or 10 or 20, I need to pay only 20,000. But I paid 21,000. 1,000 rupees I paid extra. 1,000 rupees is my adverse. That is my expenditure variance. Now, hope you are clear. Now this fixed overhead cost variance is subdivided into fixed overhead volume variance, fixed overhead expenditure variance. Fixed overhead volume variance is subdivided into calendar variance, capacity variance. Sorry, first capacity. Oh, okay, calendar, capacity, efficiency, idle time. Sir, don't go by any formula. This is also logic. That logic I'll explain by explaining the question number. There is one question extra, so that is given as an example that I'll discuss. With that concept, I'll first will discuss cost variance, volume variance, and expenditure variance. With again such a beautiful example, I'll discuss calendar variance, capacity variance, and efficiency variance. You'll remember forever the fixed overhead cost variance. Okay. Now let me take our material. Hope you have understanding up to now. Yes, sir, Roma. Let me take to the example part. So class notes will understand. Then by understanding these class notes, then we can do discuss other questions. This class note question, you can get it as 5 to 8 mark question. So that is the reason. Understand clearly. A company has normal capacity of 100 machines working 8 hours per day for 25 days in a month. Remember very clearly, this is very important. This question they may ask you in 5 marks also or 8 marks. A company has a normal capacity because the fixed rates are always calculated based on the normal capacity. A company has a normal capacity of 100 machines working 8 hours per day of 25 days in a month. This is all about budget. The budget fixed rates of a month are given 1,50,000. So budget fixed rates is given. Remember in your mind, what is a budgeted fixed rates? 1,50,000 sir. The standard time required to manufacture 1 unit of product is 4 hours. The standard time required to manufacture 1 unit of product is 4 hours. That means to manufacture 1 unit, I need to get a standard time of 4 hours. In a particular month, the company worked for 24 days of 750 mission hours per day and produced 4,300 units of the product. What is this 4,300 is called actual output. Now you have worked for how many days? Actual number of working days is 24 and each working day your mission hours are 750. Originally planned, sir, I am having 100 missions and each mission work for 8 hours. That means in a day, I should have 800 mission hours. My budget is to work for 800 mission hours, whereas actually I worked only for 750 mission hours. Instead of working 25 days, I worked only 24 days. So seeing the question first, you just leave out your fear if you are a second time listener. Okay. And produced 4,300 units of the product. Actual fixed overhead incurred were how much amount? 1,45,000. Sir, I already said two numbers will be in the exam in the question itself. What is the two? Budget fixed overheads and actual fixed overheads. What is your budget fixed overheads? 1,50,000. What is your actual fixed overheads? 1,45,000. The difference of budget fixed overheads and actual fixed overheads is nothing but than what? Fixed overhead expenditure variance. Correct or not? One variance is already got it. Sir, fixed overhead expenditure variance is equal to budget fixed overheads minus actual fixed overheads. What is your budget fixed overheads? 1,50,000, but you spent only 1,45,000, so 5,000 favorable with respect to what? Fixed overhead expenditure variance. But I need to calculate other things. Compute fixed overhead variances. Okay. Now see clearly. So class notes question I'm doing. So given first you write down whatever is given. Budget fixed overhead 1,50,000. Now budget mission hours. Sir, 100 missions. 100 missions. 8 hours per day. For how many days? 25 days. 100 into 8. 800 into 25. 20,000 mission hours. budget. Budget output. Sir, 1 unit needs how many stand hours? 4 hours. Now, how many hours I'm available? 20,000 mission hours. Budget output is 20,000 divided by 4 hours, which is 5,000 units. What is actual fixed rate? What is my actual fixed rate? What is my actual fixed rate? 1,45,000. What is my actual fixed rate? It's 1,40,000. So let me work out standard recovery rate. Sir, if you are recovering based on hour, you should calculate based on hours only. If you are calculating based on numbers, you need to calculate based on numbers. Per hour. Budget fixed rate divided by budget hours. What is the budget fixed rate? It's 1,50,000. What is the budget hours? 20,000. How much amount? 7.5 per hour. So this is what plan, sir. If I work for 1 hour, I should recover 7.5 rupees as fixed rate. If you want to calculate standard recovery rate per unit, budget fixed rate divided by budget output. 1,50,000 divided by what is the budget output? 5,000, 30 rupees. Can I calculate in second way, sir? Yes. What is the budget mission hour? What is the absorption rate for mission hour? 7.5. Every unit requires how many hours? 4 hours. 4 into 7.5, 30. So it's only calculation gimmick, right? So here we are calculate based on output. So either you can take 7.5 into 4 times, or if you know first time 30 rupees per unit. ₹30 per unit, you can just divide. So every unit will take 4 hours, sir. So 30 divided by 4 is also 7.5. So either way it is same. Okay, just I calculate both. I want third part, absorbed fixed rate. Absorption is based on which output? Actual output. Or stand hours for actual output. If it is in terms of output, you take actual output. Or I'll write down here because it is also very important. Absorbed based on actual output into standard recovery rate, or stand hours for actual output into standard recovery rate per hour. If it is based on output, actual output into standard recovery rate. If it is in terms of hours is given for actual output, how many stand hours are required? That is stand hours for actual output into standard recovery rate per hour. Okay. Now what is my actual output into standard recovery rate per unit? What is my actual output? 4,000. What is my actual output? 4,300, right? What is the recovery rate? $4,300 into what is the recovery rate per unit? 30, which is 4,300 into 30, 1,29,000. Or stand hours for actual output, both are same. into standard recovery rate per hour. What is standard hours for actual output? What is actual output? 4,300. Every unit requires how many hours, Amma? 4 hours. What is the rate, Amma? 7.5. Correct? Per hour is 7.5. Per unit is 30. 4 into 7.5, same 30, the same. So in the absence of actual output, if they are given standard hours for actual output, then also you can work out absorbed fixed overhead. That is the reason to match this. I am writing both the formulas. 1,29,000. No, I can work out three things now. So finally, absorbed fixed overhead is equal to 1,29,000. Actual fixed overhead is 1,45,000. Budget fixed overhead is 1,50,000. Now, I'll work out fixed overhead cost variance. Difference of what? I'll put this one, this two, the fixed. Don't think about 1, 2, 3. Fixed overhead cost variance is difference of absorbed fixed overhead. Okay, our stand hours fixed overheads allowed for actual production. Absorbed fixed overheads minus actual fixed overheads. 1 minus 2. 1,29,000 minus 1,45,000. So 16,000 adverse. I have collected less, I paid more. Now fixed overhead cost variance is subdivided into fixed overhead volume variance. Without formula also I can say directly. Fixed overhead expenditure variance. How can you say directly, sir? Volume variance. I have planned for 5,000, whereas I have produced only 4,300. So I'm unable to recover it for 700 units. What is the rate for under volume variance means anything is standard rate. What is the recovery rate per output, Amma? 30. Sir, from each student, I'm unable to, if the number of students are less than 40 means in the example, if I got only 35 students, I'm unable to recover it from 5 students. 5 into how much amount? 500. Similarly here, I thought of planned for 5,000, but I have produced only 4,300. So on 700 units, I'm unable to recover it. How much recovery rate per unit? If that production happened, I would have recovered 30 rupees per each unit. So 730, 21,000 adverse. Volume variance. What is volume variance? Absorption minus budget, correct? Absorption is what? 1,29,000. Budget is how much? 1,50,000, 21,000 adverse. So 1 and 3. Expenditure variance. Irrespective of my production, I should incur only budget fixed overhead, but I spent how much amount? Actual fixed overhead. So irrespective, I should spend only 1,50,000, sir, but I spent only 1,45,000. So 5,000 favorable. 21,000 adverse, 5,000 favorable. Put together how much amount? 16,000 adverse. This is up to basic level of fixed overhead cost variance. I'll repeat again. Sir, for fixed overhead cost variance, you need 3 types of fixed overhead. Absorbed fixed overhead, budget fixed overhead, actual fixed overhead. Budget fixed overheads will get in the question. Actual fixed overheads will be getting the question. You want to calculate absorbed fixed overhead. Absorption is based on which output? Actual output. Actual output into what? Standard recovery rate per unit. If you do not get actual output, then you should go with standard hours for actual output into standard recovery rate per hour. How will you calculate standard recovery rates at budget fixed overheads divided by budget output per unit? Per hour means budget fixed overhead divided by budget hours. That's it. Now, why you got this 21,000 adverse? What are the factors of this 21,000? That is how we'll try to understand the calendar effect, the capacity effect, the efficiency effect. I'll not directly go into the answer now. Let me go with this simple example. Sir, you are in the month of March now, assume it. Sir, your results have come and our exams are approaching. Normally, every students plans for the best, but implementation is worst. Many cases I've seen in my experience, I've seen number of students, they do very much planning, but execution is at poor. Let us say a student called X who has planned for the studies for the next month. He thought that in the month of April, there would be 30 days. Each day he wanted to read for 12 hours, and every hour he wanted to complete 10 pages. This is called budget output. Sir, see carefully. You wanted to read 30 days, sir, from April 1st straight away. Two friends are there, two are in discussion. Nora, I wanted to read this time very well. So from April 1st to April 30, I will do my productive time. 30 days in a month. Each day you should read it for 12 hours. Each hour you wanted to complete 10 pages. That is how you have arrived at the budget output. How many pages? 30 into 12 into 10 pages. So in 360 hours, you wanted to complete 3,600 pages. So this is all planned on March 25th, I assumed it. March 20th, 25th, you have planned. No, I should do very well in this examination. So planning he has written every day. Morning I should wake up at this point of time. I should read up to now this subject, next this subject, and every hour I should read 10 pages. Now, how many hours are available with this in his month? 360 hours. Have you got this 360 hours? Tell me. 30 days into 12 hours. 30 days into 12 hours. 360 hours. Each hour you should complete 10 pages. That is a target. Now, March 31st has arrived. His boss has requested for 1 day stock audit. Only March 31st only stock audit will be done, right? Or some movie, some trivial movie has released. His friends have approached him. Okay, 1 day, please give it to us. From next day, you can read as you wish. With the friends' pressure, he decided, okay, still have 29 days. I can cover all these 3,600 pages. Let me go to movie on April 1st. First day of financial year, right? New year. Tell me, from 30 days, it has come to how many days, Amma? 29 days. That means from 360 hours, we say budget hours, right? 1 day lost. 1 day lost. 1 day means how many hours he lost? So whether he'll read it for 12 hours, 15 hours, that is irrelevant. 1 day loss means I decided not to study for 12 hours. 12 hours you have lost. 12 hours is lost because of what? Calendar. So while calculating calendar effect, please understand that. So when I decided not to study for 1 day means you have not studied 12 hours. That's it. On the other time I read 15 days, 15 hours. On the other time I read 20 hours. That is irrelevant. 1 day lost means 1 day means 12 hours lost. So how many hours am I available now? 360 into 12, 360 minus 12, 348 hours. That is 29 into 12 days, correct? 348 hours. On 2nd April, he started reading. Till now, he went to office and did not have, he didn't sit for so much long time. Okay, in CA, it is common that you need to sit for long hours. So practice lot, okay? He understood his capacity. He understood his capacity. Sir, my capacity only I can read it for 10 hours a day. even though I have planned for 12 hours a day, even though I plan to read for 12 hours a day, when it comes to real capacity, I said that so I cannot sit for more than 10 hours. 10 hours is too much exhaustive for me. 10 hours is too much exhaustive for me. Now tell me, that means how many days are left now? Whether 30 days are left or 29 days left? 29 days left. Why, sir? One day of straight away loss, whether you read on that day or not. One day loss means one day straight away 12 hours are lost. Now, out of this 29 days, you have planned to read 29 days into 12 hours. But you cut short 2 hours per day. That means out of actual working days, now tell me, from budget working days, you have arrived to actual working days. Budget working days is 30. Actual working days is what? 29. From 30 to 29, you are decided to read for 29 days. Every day you are planned to read 12 hours, but because of not having capacity, you have shortcut your reading time from 12 hours to 10 hours. Now tell me how many hours you have lost right away, Amma? How many hours you have lost right away? 29 into 2 hours lost. How much amount? 58 hours lost. 348 minus 58. 290. Have you got this 290? Sir, now you have decided to read for 29 days. See, understand the logic numbers. This is where I'll take you to these variants. If I take directly, you take the standard hours, actual hours, and blah, 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 blah. You'll not understand. Take these numbers in your mind. Then you can understand the logic here. Now we got this 290 hours, sir. Sir, I plan to read 29 days, each day 10 hours. That is what actual. So from budget, you have arrived to actual. From budget to actual, two effects are given. One is calendar, one is capacity. If there is no calendar, the difference of budget and actual is only capacity. Remember this important point. If there is no calendar effect, the difference of budget hours to actual hours is because of, or budget hour to output to actual output is because of, sorry, budget hours to actual hours is because of capacity variance. But here two effects are there. One, calendar. So from 360 hours, how we got to 290 hours, sir? 12 hours lost because of not working for one day. 58 hours lost because of not working 12 hours a day. That is, your decide to work only 10 hours a day for 29 days. Now tell me how many hours you are really read. 29 days, sir. Each day how many hours? 10 hours, sir. 290 hours only read it. Now, how many pages I read? Sir, I am more efficient, sir. Each hour I read 15 pages. Sir, in this 290 hours, I should normally read how many hours per day, per hour, 10 pages. 290 into 10. I should read only 2900, but I read finally 290 hours into 15 pages. How much amount? 4,000. This is actual. This is standard output. Efficiency ratio is what? Difference of actual output and standard output. Yesterday, that is only we have discussed. Yes or no? Efficiency ratio is equal to what? Actual output divided by standard output. Comparison of standard output with actual output is your efficiency. Now, that means the effect of this is because of efficiency. Sir, normally with 290 hours, sir, efficiency is always based on how much you have worked. Efficiency is not based on budget. Efficiency is based on actuals. With 290 hours, I should complete 2,900 pages, sir, because your standard output says that every hour you should complete 10 pages. 290 hours into 10 pages, 2,900 pages you should complete, but you have completed how many pages? 4,350. You have lost hours in terms of not working for one day. You have lost hours of not working 12 hours a day, but your number of pages increased because of what? Efficiency. So from standard output, you have arrived to what? Actual output. This is because of what? Efficiency. That means Earlier I should decide to read 3600 pages, but I read how much amount? 4350. Now how my output got increased? Because of calendar I could not read for 12 hours. 12 hours means 120 pages, standard 12 hours in 10 pages. So from 3600 here, 120 pages you could not able to read because of calendar, because 12 hours into 10 pages a day, correct? 10 pages per hour. Because of capacity you are not read for 58 hours. 58 hours means how many pages you lost? 580 pages. But because of efficiency, now for 290 hours, instead of reading 10 pages I read 15 pages, means 5 pages extra. How many? 1450 pages I read more. What is 4003? So from 3600 to 4550, calendar down, capacity down, efficiency more. That means, what is this 3600? Budget. What is this 4350? Absorption, actuals. That means volume variance is what? Volume variance is what? Absorption minus budget. So in volume variance, which rate I should consider? Standard rate. That means in calendar, capacity, efficiency also I should consider only standard. That is the reason I said while calculating quantity variance, while calculating efficiency variance, you should consider standard rate. Either it is for output or whether it is for output. That means my volume variance could be because of calendar, because of capacity, because of efficiency. How will you calculate, sir? Hope you have understood this logic, right? Now let me come to our question. Sir, I need to prepare a small reconciliation statement. This you can prepare in the examination also. I don't want to say any formula for this logic, only a reconciliation statement. Hours output. I'll start with my budget. Budget hours are given how much? 1,50,000 hours. Now, in this question, instead of every day, how many mission hours? 800 mission hours, correct? Correct? See, 8 hours per day means 8 into 100. Now, we have worked, you have planned to work for how many days? You have planned to work for how many days? 25 days. But you have worked only for how many days? 24 days. Less calendar effect. 1 day loss means how many mission hours lost? Not 750, 800, because it's in the simple, sir. If I decided not to read for 1 day means I lost how many hours? 12 hours. Because I have for 1 day I can work for 800 hours, 800 mission hours. 1 day I decided not to work. That means 800 hours lost. Because of what? Because of what? Calendar. How much you got? 1,49,200. Now come to capacity. So calendar is always based on standard mission hours, okay, or budget mission hours. Now every day I need to work for 800 mission hours, but I have worked only how many mission hours per day? 750 mission hours. That means I have reduced my capacity for not working for how many mission hours? 50 mission hours per day. For how many days? 24 days. The reason is that 1 day I lost directly because of calendar. Now you have decided to work for 24 days into 800 mission hours. So how this 1,50,000 got? 25 days into 800 mission hours. 1 day loss means 800 hours lost. Now we have available hours is 24 into 800, 19,000. So 1,49,200 hours are available. This is what? Budget hours for actual days. This is budget hours for budget days, budget hours for actual days. The difference of this is because of what? Not working for 1 day. That is we call as calendar effect. Now for 24 days, each day I decided to work for 800, but I have reduced my capacity to work only for 750. So every day 50 hours lost. 50 into 24 days. How much amount? 1200 mission hours lost. Loss means if it is plus, if it is increasing, I'll put positive. If it is decreasing, I'll put negative, right? Capacity effect. 1,49,000 minus 1,200. 1,48,000. Correct? So it is 1,50,000 or how many hours? 20,000 mission hours. Sorry. 25 into 800 means 20,000 mission hours. Sorry. This is 19,200. I took number of output not. So 20,000 mission hours available, right? This is what I want to say. 20,000 mission hours budget. From 20,000 mission hours, so actual hours worked. Sir, now 20,000 hours you have got 24 days. You have worked for how many days? 750, right? 18,000. So how did you come from 20,000 budget hours to actual hours of 18,000? Because of two effects. One effect is calendar. Second effect is what? Capacity. Calendar 1 day, I'm lost means 1 day straight away. 1 day into 800 hours. What is balance? Budget hours for actual days, 19,200. Actual hours because of capacity effect. How many hours you have lost? 24 days, sir. Each day 50, 1,200. How many actual hours worked? 18,000. Now the volume also got affected because of efficiency. In 18,000 hours, how much I actually should produce? That is standard output, right? 18,000. Sir, each unit should complete in 4 hours. 18,000 divided by 4. Sir, you should complete 4,500, sir. This is called standard output. What is actual output? You have finished only 4,300. 200 units lost because of efficiency. The small reconciliation, if you do it, question will get completed. How will you start the reconciliation? So start with budget hours. From 20,000, you just arrive to actual hours. The difference would be because of calendar capacity. Sir, 1 day have not worked, 800 hours lost. Sir, now you have worked for 24 days. In 24 days, you should able to work for how many days? 19,200. But you have worked only how many days? Sir, how many hours? 18,000. That means every day you have not worked 50 days, 50 hours. 50 into 24 days, 1,200. So finally, you have worked for 18,000. So in reconciliation, you should start with budget hours. You should come with the actual hours worked. Now come to efficiency. With 18,000 hours, provided 100% efficiency, you should be able to complete 4,500 units, but you have completed only how many units? 4,300. 200 units are unable to complete because of efficiency. Or you can also compare with stand hours for actual output. Because what is efficiency ratio formula? Stand hours for actual output divided by actual hours. Stand hours for actual output. What is the actual output? 4,300 into stand output is 4. So how much amount? 17,200 hours. So because of this 18,000 and 17,200 is your efficiency. Or you can calculate how many units you have lost because of efficiency. 200. Each unit will take how many hours? 4 hours. 200 into 4. How much amount? Same 800. 18,000 minus 17,200. Multiple ways to understand this logic. So in terms of reconciliation, start with the budget hours, come to actual hours. With actual hours, you can compare with stand hours for actual output if the information is given or not. Or now with actual hours, how much output I should produce? That is called stand output. That means provide 100% efficiency. I should finish 4,500 units, but I have completed only 4,300 units. Okay, so 200 units have lost because of efficiency. That means so 20,000 output is how much amount? 20,000. Now I'll come with output. Sir, I have planned to work for 500 units amount. 800 hours means each unit 4 hours. So 200 hours lost because of calendar. 1200 means 1200 divided by 4 means 300 units lost because of capacity. 200 units lost because of efficiency. Net how much amount? 4300 is actual output. So from budget output to actual output, this is because of calendar effect, capacity effect, efficiency effect. What is the formula for volume variance? Absorption is based on actual output. Budget is based on budget output. Both are multiplied by same recovery rate. That is what standard recovery rate. So the output, because of from budget output to actual output, the reasons could be because of calendar, capacity, efficiency. Now let me work out what is a calendar variance. Now tell me, because of calendar, how many hours you have lost, Amma? 800 hours. What is hourly rate? Because this is all because of, if we volume variance, standard rate should be considered. Each hourly rate, how much amount, Amma? 7.5. 800 into 7.5. 6,000. Lost means adverse or unable to produce, unable to recover. Capacity 1200 hours lost because of 7.5. This is 9,000 adverse. Efficiency 200 units. Unit means unit rate. What is unit rate? 30. 6,000 adverse. 6,000 adverse. 9,000 adverse. 6,000 adverse. Put together how much amount? 21,000 adverse. If you want to calculate in terms of unit, 800 hours means how many units? 800 divided by 4, 200 units. 200 into 30, same 6,000. 1200 means how many units? 300 units into 30, 9,000. Two, or you can take in hours, 200 units means how many hours? 600 hours. 600 into 7.5. Sorry, 200 into 4. 200 into 4, how much amount? 800 hours. 800 hours into 7.5, same 6,000 hours. That means prepare reconciliation starts with budget hours. First give effect of calendar. Then for actual days, what is budget hours will be given. Then give the effect of capacity. Then you'll arrive with actual hours worked. Actual hours compare with the stand hours for actual output. If the information is not given, with actual output, find out what is the stand output to be produced. What is actual output produced because of his balance is because of which variance? Efficiency variance. Understood? Right? So now the volume variance is divided into calendar effect, capacity variance, and efficiency variance. Now I'll put the formula here. Few ratios important because this is they'll be asking in the examination. That is the reason I'm working out these ratios also. Because now you have covered this concept, so that is the reason. If I complete the ratios here itself, you can understand the concept here. Okay. Efficiency ratio we have worked out yesterday itself. Efficiency ratio. Two ways you can calculate, either based of hours or based on output. If it is based on hours, yesterday I told the logic, right? Stand hours for actual output divided by actual hours 100. Because your efficiency is also based on here only. Compare your actual hours with stand hours for actual output. If it is based on actual hours, stand hours for actual output or actual hours for actual output. If it is based on, right, if it is based on output, compare your stand output with what actual output. In terms of output, actual output divided by stand output for actual hours. Because now if you see in this example, with 18,000 actual hours, I should produce 4,500, but I produced only 4,300. 2 is because of 200 is because of efficiency variance. Correct? Second, calendar ratio. Now tell me, 25 days you have decided to work, whereas you have worked only for 24 days. So actual days divided by budgeted days into 100. Third one, capacity ratio. How did you work out capacity ratio? Comparing it to your budget hours for actual days and actual hours, correct? So capacity ratio is equal to actual hours divided by budget hours. So if there is no calendar, it will compare actual hours divided by, because this they'll be asking for 5 marks, no? Budget hours into 100. Now calendar, efficiency, capacity. Next one, very important. Activity ratio is equal to, activity ratio is equal to efficiency into, efficiency ratio into capacity ratio. So activity is based on your efficiency and your capacity, right? Because calendar is straight away loss. So activity is because of efficiency and capacity. In efficiency ratio, stand hours for actual output divided by actual hours. What is the capacity ratio? Actual hours divided by budgeted hours. So actual hours, actuals get cancelled. So stand hours for actual output divided by budgeted hours. Stand hours for actual output divided by budget hours into 100. That is the activity ratio. Fifth one, volume ratio. What is volume? Volume variance is bifurcated into what? Calendar, capacity, and efficiency, right? Volume ratio is equal to calendar ratio into capacity ratio into efficiency ratio. Last one, standard capacity usage ratio. Budget hours divided by maximum possible hours into 100. That means because of downtime, you may not use, for example, mission says that a bike says that you can give 100 kmpl mileage provided all these conditions are met. Sometimes because of uh, unimportant impossible things, you may not able to achieve 100. Your road should be straight away, there should not be any corrode. For that there will be normal downtime. So what is the maximum possible hours and how I literally planned? Even though I can read for 20 days, 20 hours a day, my body will not support. So I'll work out only for 15 days. So 15 hours. So maximum possible 20, but you are planned only for 15 days. That ratio is example of standard capacity usage ratio. So this is all about, so efficiency ratio, calendar ratio, capacity ratio, activity ratio, volume ratio. Volume is what? Volume variance only. Standard capacity ratio, standard capacity usage ratio. Hope you have cleared about this calendar, capacity, efficiency. No formulas, simple reconciliation. Start with the budget hours, give effect of calendar. If there is no calendar, all the difference between budget and actual is because of capacity. From actual hours, you compare with stand hours of actual output, or with actual hours, compare a stand output with actual output. You'll get the efficiency ratio. In all the cases, you'll use only standard rate because this is a part of volume variance. Volume variance means standard rate. Clear? So we have discussed in length about this fixed rate cost variance. Very beautiful topic. So in terms of fixed rate cost variance, yes. So you'll have observed fixed rate. I'll repeat: observed fixed rate, budget fixed rates, actual fixed rates. So fixed rate cost variance is absorption minus actual. Fixed rate cost variance is subdivided into fixed rate volume variance, fixed overhead, expenditure variance. Volume variance is because of planning of budget and actual. That is budget, fixed overhead minus absorbed fixed overhead. Because absorption is always based on which output? Actual output. This is the point where to be remembered. Expenditure variance means budget fixed overheads minus actual fixed overheads. That will be given directly in the examination, in the question itself. So here's how to find out standard recovery rate. Budget fixed overhead divided by budget output, or budget fixed overhead divided by budgeted hours. Absorption is always based on which output? Actual output. If actual output is not given, how will you work out absorbed fixed overhead? Standard hours for actual output into standard recovery rate per hour. Now this volume variance is subdivided into calendar, capacity, and efficiency. So for that, we need to do a small reconciliation. Start with budget hours, arrive at actual hours. The difference would be because of calendar effect and capacity effect. If there is no calendar effect, totally is because of capacity effect. Compare actual hours with standard hours for actual output to find out the efficiency variance, or with actual hours, what is our standard output and what is our actual output. Then you'll arrive the efficiency. So simple reconciliation. So all these three comes under volume variance. Under volume variance, you need to calculate. You need to consider standard rate. Okay, standard recovery rate. If it is for output, output rate. If it is our hourly rate. Now, next important point is that 6 ratios you have worked out: efficiency, capacity, calendar, volume, activity ratio, standard capacity usage ratio. So this thing which you have learned, and just revise this topic again before we go to the next questions in the fixed overhead. So all the topics are covered. We need to do the remaining problems. Take care.